What if the secret to becoming a successful investor isn't buried in complex algorithms or Wall Street jargon, but rather in the everyday experiences we often overlook? In One Up on Wall Street, Peter Lynch reveals that the best investment opportunities can come from the products and services you use in your daily life. By trusting your instincts and leveraging your personal insights, you can outsmart the market. In this video, we'll uncover 5 key takeaways from Lynch's groundbreaking book that will change how you think about investing and help you seize opportunities right in front of you. Let's dive in. Welcome to Sage Investing, bringing you timeless investing wisdom. If you're looking to improve your investing knowledge, make sure to subscribe and hit the like button if you found this useful. In One Up on Wall Street, Peter Lynch reveals that successful investing begins with what you know. Drawing from his experience managing the Magellan Fund, where he achieved an impressive average annual return of 29.2%, Lynch emphasizes the power of individual insights. He encourages investors to pay attention to everyday products and services, suggesting that these experiences can unveil hidden investment opportunities. Unlike complex Wall Street models, Lynch advocates for a straightforward approach. Trust your instincts, do your research, and leverage your unique perspective. This book is a call to action for investors to engage with their surroundings and invest confidently. With this foundation, let's dive into the first key takeaway. Takeaway 1. Invest in what you know. Lynch emphasizes the importance of investing in companies and industries you are familiar with. He states, if you spend more than 13 minutes analyzing economic and market forecasts, you've wasted 10 minutes. This quote highlights that successful investing doesn't require a deep understanding of complex financial models or market predictions. Instead, you should leverage your personal experiences and insights. When you invest in companies that align with your interests or daily life, you're more likely to spot trends, assess products, and understand customer experiences. Your unique perspective can give you an edge that Wall Street analysts may miss. Takeaway 2. The stock market is a giant laundry machine. Lynch uses this metaphor to illustrate the continuous cycle of buying and selling in the stock market, akin to clothes being washed and spun. While it may appear chaotic, this process serves a crucial purpose, sorting out strong companies from weak ones. For instance, during the dot-com bubble burst in the early 2000s, many tech companies like Enron and Pets.com collapsed as they failed to deliver sustainable business models and profitability. In contrast, companies like Amazon and eBay not only survived, but thrived by adapting their strategies and focusing on long-term growth. Those who remained patient and held on to their investments in these resilient companies saw their fortunes soar as the market recovered. By trusting in this natural sorting mechanism, you position yourself for long-term success, allowing your investments to flourish as the market does its job. Takeaway 3. In the long run, a stock is not a lottery ticket. Lynch firmly believes that investing is not just a game of chance, it's a long-term journey. He reminds us, the stock market is filled with individuals who know the price of everything, but the value of nothing. This powerful quote highlights a crucial distinction. While many fixate on short-term price movements, the true art of investing lies in recognizing a company's intrinsic value. By diving deep into research and understanding what a business is genuinely worth, you empower yourself to make informed decisions that will endure the test of time. So, shift your focus from fleeting trends to sustainable growth and watch your investment strategy thrive. Takeaway 4. Know what you own and know why you own it. Lynch highlights a thrilling truth about investing. Understanding your investments is crucial. He states, the only thing that counts is what you believe about a company and how it fits into your investment strategy. This powerful principle emphasizes that successful investing goes beyond merely picking stocks. It's about forging a genuine connection with the companies you invest in. By diving into research and analysis, you unlock the secrets behind each company's operations and growth potential. This knowledge empowers you to confidently articulate why you own each investment. When you truly understand what you own and why it matters, you can stand firm through market fluctuations, making bold decisions based on insight rather than fear. Takeaway 5. The best stock to buy is the one you already own. Lynch encourages investors to tap into the hidden potential within their existing holdings. This game-changing insight reminds us that the key to future growth often lies in the companies we're already invested in. By thoroughly analyzing your current investments, you can uncover opportunities for explosive growth. When you believe in the companies you own, you become an active participant in their success. Your familiarity with their products and trends gives you a unique edge, allowing you to spot potential breakthroughs before they hit the mainstream. Embracing this principle empowers you to leverage your existing portfolio for long-term growth and profitability. Peter Lynch's One-Up on Wall Street is a treasure trove of insights that can empower any investor. By embracing these 5 key takeaways, investing in what you know, understanding the market's dynamics, focusing on long-term value, knowing what you own, and recognizing the potential in your current investments, you can navigate the stock market with confidence and clarity.